Hello, hi, it's Mr. Intermarket Analysis bringing a review of the German DAX for the week ahead, starting 2nd of December 2013. Okay, this is one juggernaut. Unbelievable rally, phenomenal rally in the German DAX. I'm going to break this down, see exactly what's going to happen in the week ahead. Let's just cover the fundamentals first of all. Now, the fundamentals have been weak because we have been receiving two pieces of information this week, or should I say last week, with regards to unemployment rising highest level since 2011. Okay, so rekindling fears of obviously the crisis, or as the Europeans state that they are past the crisis now. So still we have unemployment problems in Germany, so that certainly doesn't bode well in terms of economic fundamentals, doesn't justify the DAX being at the lofty heights it is at present. Okay, now the other piece of information that we had some information regarding sales or retail sales on Friday. Okay, again that was a negative, which wasn't good. Doesn't bode well for the German DAX obviously going forward. So the only reason why we had the rally last week was obviously, again, I kept ranting and raving about light volume. Okay, with regards to light volume in the global markets, because we had the Yanks on the Americans on the Thanksgiving holiday, so obviously that affected the world markets and distorted the volume itself, and obviously distorted the European markets as well, because when America sneezes we catch pneumonia, and we do need them to be playing the game. Okay, so let's have a look. That's basically the fundamentals. That's the two main bearish FA fundamental analysis arguments for the DAX to come back and retreat. Okay, and there are many more. Obviously we have risk FX in obviously into resistance, etc., but that's intermarket analysis. Okay, I'm not going to go into that. That's a science in and of itself. Again, if you want to learn that, I have a mentoring program, so come and visit my website. You will find all details there. This is my website over here, inter-market-analysis.com. I've got details regarding the live analysis service, which obviously I share my trades in real time. I've got details regarding the fundamental analysis service, which will be starting in January onwards, and I have the details regarding the mentoring program here as well. Okay, so certainly have a look at that. Okay, and the information is there. Okay, and I encourage everyone to try the 1 week trial and certainly see how I perform. Obviously, hopefully, if you're looking to learn, that is. Okay, if you want to improve your success rate and improve your trading and understanding of the markets, then certainly come and join me. Okay, so okay, let's talk about the actual DAX itself now. So let's see exactly where this German DAX is. Let's try and break it down. I'll try and give you an insight of intermarket analysis as to how we can certainly work that out and forecast the markets. Okay, so German DAX on the daily chart. Let's look at the daily chart first of all. The daily chart certainly is on some sort of, like I said again, Apollo 13. That's the best way of describing the German DAX at the moment on the daily chart. We are coming into upper channel resistance. We did obviously knock through that, and we've got higher upper channel resistance there. My argument really is that any healthy market shouldn't leave gaps behind. You have a gap here, unfilled gap over here. You've got an unfilled gap here, which is the most important one, 9050. You've got unfilled gap at 8720, and you left an unfilled gap here as well at 9220. So all these gaps need to close. Okay, so a healthy market generally doesn't leave gaps behind. If it does, it generally closes them very quickly, consolidates, and obviously propels and moves higher. Okay, so given the fact that I've got a FTSE video calling for a sell-off come Monday, okay, obviously all markets are interrelated and move in tandem. Therefore, if the FTSE is weak, therefore it'll have that weakness and effect on the DAX. Although it didn't last week, but that was due to light volume. Okay, and we'll see exactly how the DAX fares this week. Okay, so market makers certainly had some fun last week, knocking out as many stops as they could. A lot of DAX traders out there probably pulling their hair out. Okay, probably liquidated and sort of closed their accounts, etc. Because it has been one hell of a rally. I mean, look at this rally here, folks. I mean, almost 1,000 points, 2,000 points, 3,000 points. It's ridiculous. So how on earth somebody actually kept their position if they had a long-term trade? You know, God help them. You know, that's all I can say. All we can do as traders is, this is why I like to day trade the markets, because I know there's a lot of manipulation, a lot of hanky-banky that goes on by central banks. It's always good to have a 30-40 point stock in and out of the markets, nail 200 points a week, and life is good. Okay, There's no point sitting there worrying day in, day out whether you have a long-term or swing trade position and you're just seeing red and red and red. Okay, it's not healthy for you psychologically. It's not healthy for you physically, and certainly distorts your reality of the markets and understanding of the markets. Okay, so last week was a good week for me, 200 odd points, almost 1,000 points in the last 4 weeks alone, and that's what I consistently achieve. Okay, so again, if you want to see my performance, etc., my insight into my trading, etc., then I have the live analysis service, I have a mentoring program, and I offer that to everyone. Okay, so certainly take advantage of that by visiting my website. Okay, so daily chart, obviously we are extended, unfilled gaps behind are acting like magnets to force this market down. Everybody's looking for a potential reversal here. Are we going to get one? That's the question. Okay, so my argument number one, obviously, is the FTSE itself is under the cosh. Shall we a British term there? Okay, I was out with one of my friends last night who's a copper, a policeman, and we're talking about coshes. So basically, that will force the obviously the DAX down. Also, with regards to the DAX, it's heavily influenced by the Nasdaq. Okay, because they're both in the innovation and technology, etc. Obviously in terms of technology innovation and bringing products to the market, and it's the last sort of part of the conveyor belt. Okay, and they are renowned for their exports as well globally. Okay, so let's have a look at the DAX and the Nasdaq, should we say semiconductors, because that's the key. Okay, so first of all, let's have a look at the Nasdaq. I think we can all certainly have a look at the Nasdaq itself, certainly pushing higher. We did have a bit of a topping tail there towards the close. Okay, so again, that's unhealthy. Why? Because you've got unfilled gaps below, unfilled gaps below again. Okay, so keep an eye on that for resistance on the Nasdaq. Okay, now let's have a look at the semiconductors. This is the key. Okay, this is the key. In order for any market to be healthy, the semiconductors must lead. Okay, because obviously components, etc., before they go into a product for it to be sold, etc., etc. So we have a rising contracting wedge, and we have a horizontal, or should we say sideways, contracting wedge pattern as well, or symmetrical wedge. Okay, so this is a bearish pattern. I can't understand how this could be a bullish pattern. You can certainly argue, okay, we're consolidating for the move higher, but yet the Nasdaq's moved higher without the semiconductors joining the party. The DAX has moved higher without the Euro stocks joining the party. That's not a good sign. Okay, without the French CAC joining the party, that's not a good sign. The DAX has moved higher without the FTSE joining the party. Not a good sign. Okay, so again, this is a move looking to go lower. We have an unfilled gap below, looking to close that and test the 200 MA going in the week ahead. Okay, so I've explained the obviously technical arguments based on intermarket analysis. Now let's try and decipher some of the leading equity variables in the German DAX. Okay, so I'm looking at Daimler here. Okay, heavily weighted in terms of the DAX. Let's see if we can find some clues. So you have a bullish channel here. We've got lower highs, certainly looking bearish. We are coming into resistance here. We had a bearish engulfing candle close in the 10 minutes. Let's go to a 60-minute chart because we're using multiple time frame analysis. H&S formation, unfilled gap below. What does that mean? That means Daimler's bearish. If Daimler's bearish, what does that mean for the DAX? Bearish. Okay. Let's go to a daily chart of Daimler. Okay, daily chart, you've got horizontal resistance and topping tails. Okay, again resistance. So if Daimler's into resistance, what happens to the DAX? Into resistance. Let's have a look at another equity variable. Okay, and let's see if the DAX can move higher because these are the leading equity variables. Okay, BASF, H&S formation on the 60-minute chart. Okay, H&S formation on the 60-minute chart. So what does that mean? What does that tell you about the DAX? That means the DAX is going lower. Okay, now for those of you that are interested in looking up and understanding the German DAX, then certainly go into Wikipedia, very good insight, etc. for the German DAX. Okay, and certainly gives you an insight there. Okay, let me just get the exact one. Okay, here we go, German DAX, and it'll give you a breakdown of all the components. Okay, so BASF is worth 10% index weighting. So if a 10% of the actual DAX is BASF, if I can forecast the DAX, well, forecast BASF, then I understand what's going to happen to the German DAX because it's so heavily weighted. Same thing with FTSE 100. BP is very heavily weighted. It's heavily weighted towards commodities, and that's the reason why the FTSE is under the cosh. Why? Because commodities are under strain. Okay, why are commodities under strain? Because there's low growth. Okay, because QE3 isn't working. Okay, and we have deflation concerns, and obviously commodities are inflationary in nature, hence the reason why they get hit the first. Okay, so these are all signs, all warning signs for those that know, and if you want to educate yourself, again, like I said, come and join me on the mentoring program. I can't go over this in a small video. I try and keep these videos as small as possible because I want everybody else to digest them easily. And unfortunately, every time I go over and over, okay, I don't rehearse this, folks. It's just, everything is just spontaneous. It's in real time. I don't write anything out. Initially, when I first started, I always thought, how do I create these videos? But if you're knowledgeable and you have that information, then it flows naturally anyway. Okay, so it doesn't make a difference to me. Okay, so again, BASF HNS formation. What does that mean for the FTSE? If it's, sorry, what does that mean for the DAX? If it's 10% of DAX, the DAX is going lower. Okay, let's have a look at another equity variable for the DAX. Okay, so let's have a look at Siemens. Siemens heavily weighted again. Okay, Siemens quite heavily weighted on the DAX. You got E.ON, which is 6%, and you have Siemens, which is around, again, 9.96%. Okay, so again 10%. What do you see on Siemens? HNS formation. Okay, so what does that mean for the DAX? Work it out, folks. Work it out. Okay, use your intelligence. Okay, so this is just an example of intermarket analysis. This is no holy grail, etc., etc. Just an example of what I do day in, day out, and how I can forecast the markets with 90% plus accuracy. If you don't believe me, etc., etc., that's why I have the live trial. Many I've hated, and many have become lovers afterwards. Okay, after you see me observe me trade, hitting 200, 300, 400, 500. My weekly count, the highest count is 769 points in a week. I do that in real time, live entry, live exit, live trade management, live commentary, live chart analysis, live fundamental commentary, etc., etc. All work is easy work, provided you put in the hard work and dedication. Okay, so always remember that. Quoting Floyd Mayweather there. Okay, so again, this is all pre-prepared. I work hard. I do my analysis. I organize my trading plan for the week ahead. Every night I'm observing. I'm analyzing in excess of 100 variables plus. Okay, now again, it is very hard initially, just like playing the piano, but if you play it every day, it becomes second nature. Okay, folks, so that's basically my own insight into the equity variables of the DAX, which are all pointing south. So let's have a look at the micro analysis of the German DAX itself. Okay, so let's have a look at where this German DAX is headed. Okay, so where are thou, German DAX? Here we are. Okay, so a 60-minute chart of the German DAX is a rising bullish channel. Okay, we have a small channel within a bullish channel. Okay, we have an unfilled gap below, which is at 9,220, and then we have the 200 MA below. We also have another unfilled gap below at 9,050. So these are all target zones going forward in the week ahead. Remember, a healthy market should have no unfilled gaps below. If it is a genuinely bullish market, again, you have another gap below here at 8,920. So these are all gaps that must be closed. Now, there are a lot of fundamental variables, catalysts, etc. that I can go through, but again, this video will be too long then. I'm not going to go into that. If you want access to that information, join the live analysis service. I give you live commentary, live analysis, live trades, etc., etc. This is just what can we say? You know, this is just, I'm just giving you just a small insight, really, to be honest. Again, if you want to educate yourself, empower yourselves, if you want to become independent traders that can successfully trade at 90% plus, then come and join the live analysis service. That's all I can say. Okay, so again, we've got a bullish channel. Obviously, we're looking to break that, test the 9,350 level. Once we break that, then obviously you've got unfilled gaps, and then you've got this key trend line variable that's been that's obviously going up from here, which is a pivot low at 12 o'clock on the 13th of November, connected to the pivot low on the 21st, and again that will be support. Okay, and we've got horizontal support here around the 8,290 level. But again, focusing on those gaps, folks, that's what we focus on. Once the volume picks up and all this stupidity where these market makers have been floating it on light volume, knocking out as many stops as they can, playing for their Christmas presents. Okay, that's basically what they've been doing. Okay, playing for their Christmas presents because they're knocking out your stops. Okay, so they've had run. I mean, their Christmas has come early. Okay, and it's only the 1st of December, so certainly a good time for them. Okay, I won't mind being a market maker myself. I know exactly how to knock out stops. Anyway, so that's the 60-minute chart. Let's go to a 10-minute chart now. Let's get further insight into what's happening here. Again, like I said, let's focus on all those gaps below. Okay, we've got an unfilled gap. So the first gap that we're going to focus on is going to be the 200 MA 9,350. Watch out for 9,350. If we do hit the 9,350, that'll be a zone that I look to go long. Okay, with regards to looking at and observing the markets. We have obviously we had this wedge pattern we broke out. Really on stupidity, really nothing but light volume. Really, I got stopped out back there -40, by the way, folks. Although my FTSE are closed for +10, and I was 250, 260 points for the week at the time, and obviously I finished with 225 because of the minus 40 there. But again, it's trading, you know, at the end of the day, you know, I don't really care if it's light volume, so on and so forth. I trade what I see, okay? I do this day in, day out. Follow your setup, follow your trading plan, do it consistently, and you're about at 90%, okay? Ignore all the stupid light volume, etc., arguments and talks, etc., etc. We know it's there, we know it can create a short squeeze, but we always trade our plan because we consistently trade, you consistently take the same setups. In the long run, you might have a bad week, you might have a bad day, but in the long run, you're going to nail 200 points a week, okay? And each to their own, and everybody has their own trading plan and strategy, okay? And I wish everybody good luck, I wish everybody success. I don't hate anyone, I don't have any jealousy against anyone. I wish them the best, okay? At the end of the day, this market is hard enough. There's no point us bickering and fighting amongst ourselves. We should be busy fighting the markets, and these HFT algos and bots out there that are cheating the markets, and all those insider traders that have inside information because they pay the exchanges so they can get 15 seconds, they can get access to the information 15 seconds before, or those chaps that are on the Federal Reserve or the FOMC or the ECB VIP list that get access to the minutes 2 to 3 days beforehand so they can front run the markets. Trust me, we've got bigger enemies out there. There's no point fighting each other, okay? So, okay, folks, call it a day there. Risk on, risk off. Watch out for that bear flag before I finish. Remember, bear flag formation, topping tails, inside bar. So remember, folks, risk on, risk off. Wax on, wax off. Take care. Goodbye now.